Hey, Eric here from 5minuteinvesting.com. And today, I want to chat with you about the 3 news investing strategy I personally use to make thousands of dollars. First, when you're looking at news, you need to understand the limitation of news. Is that you're not going to be the first to know. By the time it hits the newspaper or CNN or BCC, you're probably the last person to know. But you can still use news to give you an advantage and to invest better and to profit from it. Now, what are the 3 strategies? First, new products. If you picked a good company you like, you trust, and you're a customer of, and you know that there is a new product coming out, then you can look at historically how people react to new products and whether you think this new product is good. Now, this gives you a head start compared to everyone else who waits for the product release. Because you know this new product is going to be launched in 6 months or a year. Basically, this gives you a little bit of time to be ahead of everyone else. The second strategy, new market. Now, again, this is similar to new product. When a company is expanding, at first it might only be in New York or in the US, but as it is expanding into Canada or China, obviously that's a big market, India, this will lead to a substantial growth in revenue over the next 3 to 5 years. These are major plans. Now, because you understand the company and you did your homework and you like and you trust and you are a customer of this company, you know that the likelihood of them being successful in a new market is high or low. Let me give you an example. For example, I used to invest in Shake Shack because I know that Shake Shack is currently in US or mainly in the East Coast of US, and they're planning to expand. And one of their most profitable markets is China. And they're planning to expand in China, and they're planning to open their first store in Hong Kong, yada, yada, yada. So given that China is such a big market and the previous success of McDonald's, I'm very confident that Shake Shack will have an increase in stock price, will have increase in revenue and profit, and so on. So that's how you can use new markets to invest better. Now, the result, I made 70% from Shake Shack in less than 6 months. So basically, if I invested $100, I made $70 from Shake Shack in less than 6 months because I know or I read from the news that Shake Shack is going to expand in China. Now, of course, a lot of other people know too. Then how come I can make money? And that is because until the store is actually opened and people see the results of that store, they wouldn't truly invest in it. So then you need to have a little bit of risk, which is whether Shake Shack will be successful in China. That is the premise, to invest ahead of time. Now, finally, the last strategy is also my favorite strategy. A temporary bad news. Now, of course, you can only use all these strategies I'm talking about, on good and great companies that you like, trust, and you're a customer of. So the last strategy is a temporary problem. So a lot of times when you're looking at a company and you know that the stock price is increasing and people avoid companies that the stock price is decreasing. But what if you have a company that is fundamentally great, but it has a short-term problem, like a temporary bad news? This is one of the most profitable patterns I invest in all the time. So, how does this work? When you are investing in a company, you're looking for a price discount, correct? Now, when you're looking for a price discount, usually that associates with some sort of bad news, whether it is Southwest Airlines have some sort of IT problems, or United Airlines drag someone off the plane, or Lululemon missed a quarter of the earnings. You get the idea. A temporary problem that you think will be resolved soon. Because if you have a fundamental problem, with the company, then the stock price is not going to recover. But if it is just a short-term problem, just for a couple of months, and investors are stupid and they lose their confidence over a great company because of a short-term problem, this creates an opportunity for you and I to invest in the market at a discount. This is my favorite strategy because A, you're not trying to beat the news and trying to invest ahead of anyone else because the bad news is already public and everyone knows about it. So you can use this to your advantage because you know this bad news will be resolved. And when it's resolved, the stock price will recover and it will continue to grow like how it always used to grow. So then you make double the money. Now, as an example, 2 years ago, I invested in Southwest and they have some IT problem. So that was actually a real example. And at that point, I did some research and I realized that a lot of airlines in the markets have IT problems too. So it's not like Southwest is the only company that has a temporary IT problem. And I'm quite sure this problem is not going to cripple the company. And Southwest is one of the best airlines out of the entire airline industry because it's profitable for, I think it's 40 years straight. So in airline, that's unheard of. So when you think about this IT problem that they have 2 years ago, I'm quite sure it's going to get resolved. So as a result, I made just a little bit over 80% from Southwest Airlines in less than 12 months. So think about that. Thank you for watching till the end of the video. And I'm very excited for you because you're passionate about investing and you want to change your financial future. And I really appreciate your support. So now the biggest question for you is how do these strategies, tips, and tricks fit into the entire investing approach? Because you're learning one of the 62 steps I teach on 5minuteinvesting.com. And when you apply all these strategies correctly together, your return, it's going to be tremendous. And since 2016, my return to date is 204%. So, how do these strategies fit into the bigger picture for you?